Hey traders, it's Leaf West. I'm going to go through and compare the indices and the situation or the position they're in right now. The market's pretty confused right now, whether it wants to go down hard or whether it wants to break above and squeeze higher. And there's some conflicting signals in the different indices, so I thought I'd go over that with you. Um, Here's the spiders. It's a daily chart. I'll look at the daily charts for the time being, and we'll drill it down a little bit. Um, let's take a look at the position of this bounce. All right. So I've said in the past that we made a new low here, so we have to expect resistance on price as it moves higher off of that low. And we have, and we've had structure, we've had waves, and so we've got into the middle of the sort of slot area where I like to see retracements get to. And if you are this June 4th low is an important low. We've gone over that 100 times. So if we assume that that value has, or that level has value, then this move off of resistance should hold in support. That's why I was bullish here, and that's what I'm looking at right now, whether or not this price is going to hold up here, and then we're going to squeeze higher. But if you were just to look at this and not put a lot of value on the June 4th low, then you'd have to say that we're going to do a bigger A, B, C, right? That's what corrective patterns do. Make a new high, and then you do your corrective pattern, and you go off and you either make a new high or it fails, and the price trend turns around and heads the other way, right? So we're right in this sort of middle ground area where price is confused, and we're getting a lot of big candles, a lot of days like the 10th here, where the high was higher than it's an outside day. The high was higher than the previous day, the low was lower than the previous day. So it's a day like that. And then today, again, same thing happened. Market breaks a low and then rallies hard at the end of the day. So it's whipsawing a lot of people. But that's the situation in the spiders. And if you look at the QQQs, same sort of thing, right? Look very much the same. Again, let's take a look at the last wave and where we are in the retracement of that wave. Again, structure and wave, structure and price percentage in terms of the retracement. And now we're sitting here wondering whether we're going to break and do our A, B, C, or whether this is going to fail and we're going to pull back into support here and then go and possibly take out a new high. Take out this high, and then take out this high. The odds are we're going to take out this high and then take out that high. So that's very similar to the spiders. And the only one that is sort of making me wonder what the heck is going on is the Russell and then the IWM ETF. This I blogged a fair bit about this when this was happening. We had a head, left shoulder, right shoulder, and anyways, I blogged a fair bit about this structure when it was happening. It was showing weakness up here before the other markets were showing weakness, and it sort of tipped. The Russell does lead. It really is where the animal spirits of retail investors are shown. And what I'd like to show you here is if we do that same retracement, is that look at the difference in this. We actually closed above the 78.6. And when that happens, you have to say that this move higher has showed strength. And that means something. And that puts, I think, even more value on this June 4th low. More importance on that June 4th low. And so if you assume that is the case, which is what I'm assuming, then you have to assume that the pullback off of this high will hold support, and you will go, so let's see where that level is. So right now we're right on the cusp. If we gear down here just for a second, just to show you how close that is to the 50% level. We went down to the 50% level today and bounced off there. And did we have a structure in form here? If you go there, we actually pulled into the high of this candle was 80.96. That pulled into the slot area. So we do have two waves into the low, but here is the trick again. Remember the Patrick rule I have, that if you have two waves, and this was like a 1 bar B wave, to me that is very suspect, this stopping at exactly 50%. So because what I think can happen with this is that this is almost to be considered one wave, even though technically it is two waves because we did hit 50%. So some people would say, okay, well, you've got a wave down, you've got structure back up in percentage, so then this is a two-wave structure, you hit the slot, you're off at the races, and that may be the case, but I think there's a good chance still that we could go from here, the 50% level, and correct up here, and then make a bigger wave to there. So then you have a bigger A, B, C further down into the slot area. So that's the risk that you run if you jump to the conclusion that your pullback is over on the Russell, and it might be. So that's the tricky area. Is that if price moves up here the next couple days, when it gets up to this resistance area, you have to be wary of that. If price pulls back, and finds, okay, so say it stops right at the 61.8 there, then the support of that price will be right about in this area, right? So price could come down, and then go. Like it wouldn't have to complete this bigger structure into a lower level in this original slot test. So that's where, let me just clean this up for 1 second, guys. So that's the dilemma that I'm looking at right now, and that we have a more bullish looking Russell that looks like it can squeeze higher and break this high, and if we break this high, we're going to probably take out the previous highs. But it won't be able to do that unless the other parts of the market come with it, obviously. And that's the tricky part, because everybody and their dog is getting bearish. And again, you have minor support here, and we came down to that. We came down to that level today, right? We made a wave structure down into support, and people got really bearish. And what were they doing? They were, let's go down to the 15-minute chart. So here's today's action. Price couldn't rally today. It broke the lows, and what did everybody do? Well, you got to short this, right? You broke the low. It's an obvious level. We broke yesterday's low price, so we got to short it. And what happened? They got squeezed. This was a minor wave higher, and a break of this low only will produce, in almost all cases, minor wave push through, and then you got to squeeze. So this is what's happening on a bigger scale, if you think about it. Right? Is that if we get a break push down tomorrow, again, I think what that does is sets up a squeeze. So you have to be a bit wary here. Like we could get a bigger bounce here, and then a break of this level on a minor push through on some kind of minor wave, right? And the same thing happens, is that you have a minor wave push through into support, and that's what sets up the squeeze trade. Go back to January 4th. Where's January 4th? Oops, too far. On January 4th, June 4th. Exact same thing happened here, right? You broke a minor low, you gapped down, broke this low, everybody got short, because that's exactly what everybody thought they should do. right? You're breaking an obvious level, get short. Well, what happened? You had a huge squeeze, right? You went down to 127, 127.14 for a low, and your first time you came up for air it was at 136. So, that's what the market likes to do when it's squeezing. So all I'm trying to say is that there's potential for the market to squeeze higher here, and there's potential for the market to roll over. Who knows what it's going to do? But the Russell is a leading indicator, and it's something you have to watch. I think intraday and pay attention to, because if it's going to go higher, if it takes out today's high, if the Russell takes out today's high, let's just take a look at. So this is the Russell ETF, and so if we take out today's high, which was the first bar of the day, which was 80.96. No, it says here 79. What day is that? Is that today? No, that wasn't today. Today's high was. My high up here says the high today was 79.65, but according to this candle, the high was 80.96. Anyways, what I'm talking about is if we get above this 61.8 level, and it looks like it wants to stay up there and doesn't want to turn and roll over and die, then I would be very suspicious of the market going lower, and that we may get a bigger squeeze higher. So that's food for thought going forward. And let's just take a look at everybody's favorite stock, Apple, right? Anyways, I did a video on this morning, so I'll just take a look at the daily. All right, it's still pretty bullish, right? It got up to 78.6, got above this symmetry resistance level, and everybody and their dog wants to own it. But the earnings come out on the 24th, I believe. Remember what happened last time when there was a new launch for an iPhone. iPhone's so important that they disappointed in the numbers for the old iPhone as people delayed purchasing the phone because they wanted a new phone coming out in a couple of months. So maybe that's going to happen again, maybe not. Maybe the whole China story for this stock is so amazing right now that that's going to blow right through this. And so off the races we go. But anyways, go back and listen to my video from Apple this morning if you want to get more details on what I think of the chart on this stock. So I'll leave it there, and good luck tomorrow, guys.